Okay, I wanted to do one more video on inflation, at least one more. And what I wanted to do, and we hinted on this on the prior video, video 139, where we talk about owning productive assets, owning assets in order to protect you from the harms done to you by inflation. And I want to go through kind of two categories of assets, one of which everybody brings to mind, for example, the idea of owning gold or real estate, right? These are sort of standard examples of ways to protect yourself from inflation, and they can work very well. Gold has certain pricing cycles, and real estate too. Of course, there's a lot of drivers for what drives the specific price of a property you own. But what I want to talk about here is some drawbacks to these non-productive assets. Gold, basically, it just sits there, right? In fact, there's even a cost to owning gold. Often you have to insure it or store it in a safe deposit box, for example. It can be seized by the government. That actually was done in the United States in the 1930s. I think many Bitcoiners actually stumble into the rabbit hole of learning about the Gold Seizure Act during the 1930s, and they're sort of stunned that that can be done. It's sort of an awakening moment for a lot of people. So there are drawbacks and cost structures to owning gold. Likewise, with a home, the value may go up with inflation, but so will the cost structure with that house, right? Your property taxes are going to go higher. The cost of maintaining your house and of hiring labor to come fix things, for example, that's going to go higher. Your energy costs are going to go higher, right? So you don't have a lot of control over the cost structure of these types of assets, and in that sense, they're not that productive. There's a little nuance here with real estate where you could have a rental property where the income, the rent that is paid to you as the landlord, has an index to inflation. In other words, it goes up with inflation. And that can protect you from some of these cost structure problems. And so that would be maybe a more sort of a type of asset that's more productive than just your family home that you live in, right? But the best form of productive asset would be different kinds of stocks that produce assets or products that are going to be sold regardless of the currency backdrop. And I want to actually go through just sort of a quick thought experiment. If you think about the company Coca-Cola, or like a bottler in Coca-Cola, or a subsidiary, the domestic subsidiary in, say, Venezuela, or in, say, Argentina, right? Where Argentina debases and rolls out a new currency every 10 or 15 years. But Coca-Cola is sold over the whole long-term history of this country, right? And yes, that company, the domestic company, will be harmed when the money is debased because they're going to have some cash on their balance sheet. They're going to have problems with having maybe their labor costs going up or down, and there'll be some issues in the short run perhaps with supply and demand. But in general, this is an asset that can be transacted in regardless what the currency is, right? Or in Venezuela, almost certainly people now buy Coca-Cola paying in dollars, right? Because that country is effectively dollarized. And so you think about a company like Coca-Cola, and I'm not recommending the stock per se, but just think of it as a sort of a genre of company that would transact and would be buying products or selling products, doing business, regardless of what the currency regime happens to be, and even better if they have pricing power. In other words, they can index their price or have their price go up with inflation. And this brings to mind, obviously, something like a tobacco product, right? Throughout the United States, the last, say, 50 to 70 years, tobacco prices have gone up basically with inflation, if not a little more. And so this is fine. This is a perfectly good way to protect yourself because the demand is not changing that much based on what happens to the price. It's sort of a relatively low ticket item, just like, can of Coke too. It's not a high ticket item. Whereas I would say, once autos start to cost $30,000, $40,000, $50,000, you need to start to see wages go up in order to sell the same number of cars, right? So there's going to be kind of certain products might experience a decline in demand when the price point gets beyond a certain point, right? So this is sort of just a lens to think about the types of companies to invest in that will exist on a layer above the currency and still transact. And there's also, I'll just leave you with kind of a joke that people will make about inflation. They'll say, you can print money, but you can't print oil. You can't print gold, right? You can't print Coca-Cola, or you can't print Bitcoin for that matter, right? Bitcoin would be kind of a gold-like investment with certain advantages. But a productive asset, like a productive business that has good cash flow characteristics, pays a good dividend, can grow that dividend, can also maybe even fund a buyback. A lot of companies, say in the oil industry, would be in that kind of characteristic. It may not be a very high margin business, but they can definitely index the selling of the oil to whatever the inflation rate is, because oil is going to be transacted in dollars, for example, if you're a US based investor. And so if you sell oil in Argentina, again, it's sort of the same situation as Coca-Cola, basically. And so you should be protected quite a bit from the ravages of inflation. So think about that. You want to think about these two genres of investments, productive assets and non-productive assets. Remember, gold, your family home, right? And then you want to think about, among productive assets, which would be equities in good companies with good cash flows, growing dividends, buybacks, and good pricing power. And I'm not giving you any specific stocks to think about, but I want you to think about this genre of company and the companies that you're owning to be in that group. And then it's up to you to sort of decide which stocks meet your needs or not. And then I'll leave you with one final comment, which is typically during inflationary eras, you tend to get more volatility in equity markets. And so this is another problem, right? You might have a year where you're down big, even though you bought the right stocks, right? And so this is just something you kind of have to live with. And I guess I recommend what people do here is just think very long term. Don't worry so much about this year or next year's performance of a given stock or your given portfolio, but just think about the type of asset you want to own that you think will protect you over, say, a 10 or a 20-year period of gradual or potentially rapid debasement of your currency, and a product that will still be wanted, demanded, needed, regardless of what the currency regime is. And this should protect you from inflation and help you maintain your purchasing power over time. Okay? As always, I hope that helps, and thank you for watching.